and a very warm welcome to Daily Dispatch, a show that gives you all the latest news and updates from the digital ecosystem. I'm Priya Sheth. Thank you so much for logging in. Time now to get you all the top news stories that we've been tracking for you this evening. Well, first up, Silicon Valley-based fintech startup Stripe has emerged as the second most valuable unicorn globally at $95 billion, second only ByteDance after its latest fundraise of $600 million. Now, this payment startup also has plans to launch operations in India very soon. Well, moving on to the second headline of the day, Mumbai-based online pharmacy PharmEasy has filed for regulatory approval for its upcoming funding tranche from Process Ventures. Now, according to the filing with the Competition Commission of India, Process has proposed to acquire an undisclosed number of shares in PharmEasy. Now, reports are suggesting that Process is expected to pump in around $200 million into PharmEasy. Well, technology-focused venture capital firm Ankur Capital has raised about 330 crore rupees ahead of an interim close of its second fund. Now, the total target size of the fund is around 350 crore rupees with an option to retain another 50 crore rupees depending on investor interest. Now, the fund is looking at a final close by this June and expects to deploy it fully over the next 24 months. Well, moving on to the final headline of the day, home services marketplace The Urban Company aims to onboard over 20,000 professionals on its platform this year to meet the strong growth and demand for various services post the lockdown. Now, currently, the company has more than 40,000 gig workers on its platform, of which over 35,000 are present in India.
Well, moving on to our second segment, I have with me someone who has signed a very big deal of late, has been in the news. I have with me Michael Fernandes from LeapFrog Investments. Thank you very much for being a part of Daily Dispatch. I want to begin by asking you about the new partnership that you've signed with Temasek. It's a big partnership, $500 million out there. Run us through what this partnership entails.
Sure. So, Temasek and us have been in conversations for a number of years because as part of Temasek's own journey, they are very keen to be part of the entire impact investing space. And they've been looking at working with different impact investors over time. And we've been in conversations with them for a number of years. And I think increasingly it became clear to them that in order to make a big commitment into the space, there was value in being in partnership with one of the emerging impact investors. And LeapFrog over the last 10 years has really built up a reputation as being a specialist impact investor. I mean, that's all we do. All our funds are oriented towards the construct of bringing emerging consumers essential products and services across the region. Right? We work across Africa and Southeast Asia. So I think for Temasek, what made sense was to have an ability to work with a platform to actually take the impact thesis forward. And for us, what made sense is when you're partnering with someone like Temasek, being able to have, the transaction includes both a commitment to future funds of LeapFrog, as well as a commitment to provide some growth capital to the entity itself to allow us to broaden our impact horizons. Today, we focus on healthcare and financial services. This allows us to do more within those spaces, as well as broaden our impact remit to newer spaces, right? And actually to bring on appropriate teams, talent, and infrastructure around that. So really, I think in a way, this helps both of us raise our impact game and very aligned to at least where LeapFrog had its own impact vision of over, I think we made that a couple of years back. So by 2030, trying to reach at least 1 billion people with essential products and services. So this really helps us jumpstart that.
You mentioned that healthcare and financial services are two priority areas for LeapFrog at this point in time. So within these sectors, are there subsectors that interest you where you see that there is enough and more growth potential going forward?
To be honest, the growth is really the constraint. When you're bring products to emerging consumers, growth rates are the least of the challenge. Our companies would typically grow somewhere between 20 to 40% per annum, even in average years. It is really getting the economic model which works, which delivers products at appropriate cost and can do large-scale distribution. Within that, we've been very excited by the entire insurance space. So there's been a lot of work in microfinance across the world. It hasn't been as much in microinsurance, and we've been one of the pioneers in microinsurance. One of our portfolio companies, Bima, which we'd invested in our first fund and actually returned to in our third fund, works with telco and other digital payment solutions to effectively provide microinsurance to a whole host of clientele who otherwise would not be able to either buy insurance or if they have insurance, claim on it and actually get the benefits from it, right? Because that's where a lot of the cost infrastructure is required. And they've been able to really create a model working along with telcos and digital providers to deliver that. Another business of ours, Jumo, which does digital lending, one of the pioneers in digital lending in Africa, is actually acts as a very important safety net and port of call for a number of what are called nano SMEs, really small companies requiring top-up capital, very quick, easy access to loans to effectively keep their supply chains going, right? So fruit and vegetable vendors who early in the morning require a small amount of cash to be able to buy their stock, which they can sell off during the day. People who drive, taxi drivers and others who will require a similar upfront purchase of fuel, which they can then use during the day. And very difficult to actually access nano loans very quickly. Jumo is able to provide that solution. So what we found is the market for these products is enormous, right? In health, the key focus area for us, and which again we believe is an enormous growth opportunity and an enormous impact opportunity, is emerging consumers. People sometimes sort of think emerging consumers are basically suffering from infectious diseases. The reality is, across the markets, potentially due to dietary and lifestyle changes, other factors, they are the biggest pool of people suffering from chronic issues. So diabetes, for example, is rampant in emerging consumers, as is cardiovascular issues. And something like diabetes or cardiovascular requires constant intervention. You have to go to the doctor regularly, you have to check your blood regularly, you have to begin to monitor the disease. So enormous growth opportunity there, enormous impact opportunity there. And for us, the way we are addressing it is through distributed products and service models, right? So our pharmacy chain in Kenya, for example, Good Life, enormous opportunity to provide pharmacy services, but they've layered on top of that the ability to provide simple diagnostic testing, blood pressure, sugar, etc., to effectively manage diabetes. Right? So what we find is we're able to create the right economic model. Growth is really the constraint, right? I think the market is enormous.
Give our viewers some perspective in terms of what kind of active funds are you looking at this point in time, and in terms of what is the kind of allocation for a market like India that you have in mind for 2021?
Sure. So, we've been on. So we are currently investing out of our third fund. Right? So our first fund was a smallish fund, 140 million in investments in India. It had invested in and has exited the Mahindra insurance broking business, and then also had a business with Shriram Credit Capital, which was a subsidiary of the Shriram Group based out of Chennai. Our second fund was a $400 million fund, which was a 2014 vintage. And of that 400 million, around 30%, about 120 odd million, was invested in India. The largest investment in that set was a business called Northern Arc Capital. And Northern Arc provides financial services support to a number of other microfinance and affordable housing finance and SUV lenders. It actually acts as a big gateway for capital to flow into inclusive finance in India. A very substantial business based out of Chennai, and also a lot of activity out of Bombay, do direct lending as well as work through fund structures. Magma Services, which was recently acquired by the Poonawalla Group. The shareholders approved that this week itself. The FinCare, which is a small finance bank based out of Bangalore. And Dwara, KGFS, which is a very innovative wealth and lending business based really working in second and third tier towns, initially primarily out of Tamil Nadu, but has now expanded into multiple markets. So it offers microfinance loans, it offers other wealth and understanding solutions to to the rural economy. Right? It's a very innovative business, growing very rapidly out of that. Our third fund, which is a $746 million fund, again, around 30% of that's allocated to India. There's about 200 million of that's allocated in India. That's what we're actively investing out of right now. We already have a number of transactions in the fund to the SME industry using digital underwriting and collection methodologies. So one of the pioneers in that space, very high quality unit economics, which they built up over time. It's managed to work through multiple shocks to the sector and looking for very rapid expansion over 2021 as the market begins to recover from the shocks of COVID. Ascent, which is in our health, one of our first investments in the health space in India. We only began investing in health in our third fund. Ascent effectively provides a range of products under the Flamingo brand name. And in fact, Hrithik Roshan was their brand ambassador for some time. But what they're effectively doing is taking global products and creating local products that really work for the local market to provide pain relief. So back protections, kneecaps, etc.
I wanted to know in terms of I was looking at the press statement that you all issued, and you said that, you want to look at accelerating investments in India following this partnership with Temasek. So in terms of what kind of investments can we expect forward? Do you expect this entire corpus of Fund 3 to be deployed by 2021? And is there scope for a Fund 4?
So Fund 3, we would expect the deployment to complete between 21 and 22. And the intention would be to launch new funds for healthcare and financial services over 2022. And I think having that Temasek support behind us will sort of really get us moving faster. We typically invest somewhere between 30 to 40% of our funds. So our funds are multi-geography. India is a core geography, so as the country, from a country allocation, it has the highest country allocation of all our investments. Would typically be 30% of the overall fund would be invested in the country. But then we also invest elements of our funds in Sri Lanka and Southeast Asian markets, as well as in sub-Saharan African markets. And a few of our investments will be pan-regional. So these are digital financial services players. For example, our third fund, we have a business called World Remit, which operates out of India, as well as other emerging markets, and actually acts as a very high volume, low cost remitting solution for international workers to send money back home at very effective rates.
All right. We look forward to the deployment and, of course, the way forward for LeapFrog Investments in India specifically. Thank you very much for being a part of the Daily Dispatch. It's been a pleasure speaking with you. Thank you so much for your time.
Thank you.
Well, time now to say goodbye. Many thanks for joining us on this edition of the Daily Dispatch. I'll see you tomorrow at 5 p.m. Goodbye and stay safe.